Tell us a little bit about your forecast for the demand environment, because you have been a little bit more bullish than some of the Wall Street forecasters and the IEA.
We strongly believe that the demand fundamental is healthy and strong. We are seeing a demand growth of about 1.1 to 1.3 million barrels per day this year, almost the same next year in 2026. It's a record year for oil, gas, and even coal. When you look at the 5-year average, it's at the lowest end of the 5-year average in terms of physical barrels storage available in the market. So it tells you that demand is real and it is strong. It is not reflected in terms of oversupply or glut. Otherwise, you will see these storage facility increasing significantly.
We don't have oversupply glut because supply is growing from the U.S.
Supply-demand fundamentals healthy. We are seeing more demand, especially from developing countries. We're seeing demand growth from Asia in general, and even from the U.S. The demand is strong, and that's reflected on the call on us for supply.
There's a concern about China demand, that they're shifting to EVs quite rapidly, and that'll decrease their oil consumption. They've been the biggest consumer for years now.
True, there is an increase in the number of electric vehicles in China, but you have to look at also the other sectors, because even with that growth in electric vehicles, and still internal combustion fleet is huge in China, the other sectors that are also increasing, offsetting that small decrease in because of electric vehicles, is aviation is growing by almost 8 to 9% in China, requiring more jet fuels, and liquid to chemical. We are seeing growth of 500 to 700,000 to supply carbon fiber for electric vehicles, for solar panels, for turbines.
We're actually making them.
So they need more liquid to chemical. So oil is shifting to chemicals and using it as carbon fiber on all of these sectors.
So you don't see a slowdown?
No, we don't see. We have been saying this for some time, that oil, gas will continue to grow for decades to come. And this is reflected on record years, year on year.
What about on the supply side? What will be the impact of the U.S. now imposing sanctions on Russian oil companies?
We will wait and see. It gave 30 days for certain companies or certain markets to shift. The sanctions is on Lukoil and Rosneft. We need to understand also Russia supply close to 7 million barrels export to the market, almost 4.5 to 5 million barrels of crude, and to 2.5 million barrels of products, depending on their refining health.
So if there is a need, and even if the U.S. goes further here when it comes to Russian oil, would Saudi step in to fill the gap, for instance, to places like India?
Well, you know, with regard to how much we produce every month, targets we receive it from the Ministry of Energy, depending on their agreement and quota based on the OPEC Plus agreement. So that's always will be reviewed by the ministry, and the decisions based on, they always try to stabilize the market and make sure that there is capacity, but this decisions belongs to the Ministry of Energy.
How do tariffs impact the energy market?
Well, you know, oil is not included as part, but tariffs impact the economy. Certain economies, and you know, healthier economy means more demand, but we don't see a huge impact as of yet, because the demand this year is healthy, and we expect the demand next year is healthier.
What about your own company's investment? I think you're targeting north of $50 billion in capex this year. Are you on track, and where's that investment going?
Well, you know, the target this year, the guidance is $52 to $58 billion. Today, if you think about Aramco today, there is $100 billion of construction that is going on today. So, but we execute in the neighborhood of $50+ billion in each year in terms of capital. Most of the capital goes to maintaining our capacity, MSC of 12 million barrels, but a lot of the capital is going to gas. We are growing our gas compared by more than 60% by 2030. So gas growth is significant. and most of the capital is going into gas growth, and also our latest partnership with Humane. So we are a big investor in all these sectors, in addition to minerals.
Is that going to include rare earth minerals?
We are
everyone's interested in?
We are looking at lithium right now, and we're looking at the first processing plants by 2027.
Okay, so this could come in the coming years for you.
Oh yeah, it is already under. We are drilling, because this comes from aquifers, and we treat this aquifer water, and then we extract lithium.
You've sort of called out others for cutting exploration programs early.
It is important to continue to explore. We've seen what happened in investment now. Oil investment is down compared to higher years by almost 20%. Final investment decision for projects for oil is down by almost 35%. There is a concern, considering that the decline is close to 6 million barrels per day. This is just if you maintain your current production of over 100 million barrels today. The decline, just to maintain that production as is without the growth, is 6 million. Add to it the growth, you need substantial capital investment to meet demand requirements.
So what happened? Everyone it was premature to worry about the decline of oil?
Well, I think the forecast had something to do with it. Up to last year, forecasts said that renewable is growing, and, there was some calls for companies to stop investment. If you look at requirement now for data centers, by 2030, the requirement for power for data center is almost 4 times all electric vehicles. So this is substantial. We need more energy because in spite, even though there was almost $11 trillion put in renewables, still renewable created a 15 million barrel of oil equivalent.
It's not really enough.
That is totally not enough. And
so it's renewables and natural gas. What's going to power the data centers?
Most likely, I would say more into gas, and then renewables and alternative, but more into gas. So you need more gas to power all of these data centers. You need energy, whatever the source, to power all of these data centers. And we are seeing a huge growth in energy. If you look at the last 10 years, we are almost 340 million barrel of oil equivalent. This is the energy that we have grown from 295 to 340. 45 million barrel of oil equivalent growth in 10 years. That's significant growth. So we need alternatives, we need gas, we need hydrocarbons in addition to all alternatives.
So how do you do that? How do you maintain your current lead on oil production and exploration, and at the same time invest for the future of renewables?
Well, we are focused always on the long term, and if you focus on the long term, you will make the right investment by reading the market.
You said there's going to be demand for decades for oil.
And that's why we are investing and making sure. Today we have a healthy spare capacity. We are one of the few companies in the world that has that healthy capacity, spare capacity. If you look at our gas growth, it's significant. We are also significantly investing in renewables. We are looking at hydrogens in terms of investment also, depending on the market and if there is an offtake. We are investing also, as I said, in rare earth minerals, and this is important for us. We are putting our investment because demand is there, and mostly coming, by the way, from developing countries or emerging economies. 80% of the growth is in emerging economies. The consumption is low right now. If you look at Asia, and it's 1 to 2 barrels per capita. If you look at Europe, it's 9 barrels per capita. And if you look at the US, it's 22 barrels per capita. So there is a huge potential for growth in emerging economies.
So how is technology helping you do all this? Because you have a unique position here too.
Well, technology needs talents. We have the talents, and we develop the talents, and we invested in developing the talents first. And I said, technology will not help you. I always talk about AI. You need first the computing infrastructure. If you don't have the computing infrastructure, and this requires investment over so many years, and it takes tens of billions of dollars. This is, since the beginning, we have been investing to put our infrastructure. Second, you need the quality of data. We have the quality of data for 90 years. Third, you need to ensure that you have the talent. And the talents, I don't talk about data scientists only. GPU and chips alone will not give you what you have seen. What you need is the talent and the subject matter expert. We have in data scientists in Aramco around 200 to 300 only. But subject matter expert, the professionals in the plants, in our operation, there's 6,000 trained on AI. This is why the number of use cases is increasing. This is why technology realized value is increasing year on year. In 2023, we increased value by $2 billion, technology realized value. 24, $4 billion. This is how much we realized. And in 25 and forward, we are looking at $2 to $4 billion every year.
In realized value of AI.
Technology. Out of that, of course, there is technology looks at digitalization, efficiency improvement, and all of these things in terms of.
How do you measure
that?
But
AI is 50% of what I mentioned.
How do you measure that?
Well, we have in everything, you have like a use case, and then you look at that use case and you measure it. And then we bring a third party to make the full assessment to make sure that realized value is achieved. For example, if you look at the well productivity and you're capitalizing on AI, and I can increase that productivity from this to this, that is captured. If I look at a column in a plants and I can increase the yield capitalizing on AI, we add that. So it is different components that you add. It's reflected in everything that you do. I always say, look at our cost per barrel of oil equivalent. 20 years ago, we used to say it's $3. Today, if you ask me, it's still $3. So we are able to manage a maturity of the fields that we have, inflation, and still keep it. How did we keep it at the same cost? It is technology, it is innovation, it is efficiency improvement, it is the talents that can capture all of that we have.
When you talk about the realized value from technology, is it now greater than how much you're investing in the technology?
Well, you know, definitely it's much greater than what we are investing. We are investing a lot, but this is much greater because this is year on year. Because of our, interest in technology and how much it brings to us, we are one of the biggest company in the world in venture capital. We have $7.5 billion for investment and deployment in venture capital, startups, and all of that. This is important for us. We see and calculate the realized value year on year, and we bring, as I said, it's always third-party verified for every component that we add.
You've also built a large language model, which is interesting because you're not a tech company.
Yeah, we have our own large language model. We call it our Metabrain, and it is getting bigger. It is 70 billion data point, and we are developing the trillion
data points from all the years of your exploration and production.
Our how much it can handle. So we are benefiting a lot from our Metabrain or our large language model. It is really helping us to increase the efficiency. You can see it in every component of our operation. If you visit the engineers in their offices capitalizing on that large language model to optimize their operation in the fields. Everything is accessible from Dahran. You can see any operation in the kingdom from any of our plants, operation, rigs, facilities all over the kingdom and globally. This is how we can optimize, increase efficiency, reduce cost, and also reduce our carbon footprint.
Can you produce with fewer people?
Well, definitely the ultimate is you can be more efficient but you see, I always tell people it is the people that can help you to maximize the use of that. They are skilled people, they can be retrained to capitalize on technology, and this is what we are training them to do. They are utilizing the latest technologies, the same people that are managing these plants and operation and the same engineers, but they are maximizing the value. I talked about productivity of a well. I can, with the same well, but I capture more productivity zones in the subsurface. I can increase the production, but all of it related to technology and how you utilize, and the modelings that I'm sure you have seen the simulation modelings that some of them is a trillion cell simulation model to manage a small field. It helps us to maximize value.
What about the partnerships you've done with some of the American semiconductor companies, NVIDIA, AMD, I mean, global semiconductors? What are those for, and how did they come together?
Where we have a lot of collaboration with Qualcomm, NVIDIA, Google, Grok, all of these, we capitalize on their technologies, chips, GPUs to maximize value with some of their applications. So we have a huge partnership and relationship with all of these companies to maximize value for Saudi Aramco. And it is, as I said, when I highlight the numbers of how much we realize every year, it's reflected in these numbers. So it is an investment that we have done not 2 years ago. It's an investment that we have done from the beginning in building this infrastructure. People think I can buy GPU and chip and put them in a data center and I can achieve all of that. No, you need the huge infrastructure that connect, the fiber optics that connect all of these plants, that train people who understand. Most of our use cases did not come from our data specialists or data scientists. It came from the subject matter expert in the plants who understand AI, who were trained on AI, and they come up with the use cases and the saving. Most of the saving is more, you will see it in operation than in the offices. This is where you will capture the billions and billions of dollars of saving.
So do you think Wall Street, do you think the market appreciates the scale of just how much you're leveraging AI and the talent that you've developed?
Well, I'm sure our shareholders appreciate that. It's reflected in our number and our cost. As I mentioned, the cost per barrel didn't increase over years and years, and this is more efficiency. It is the market appreciate our carbon footprint because technology helps us also to reduce our carbon footprint. If you look at how much our carbon intensity, it's 9.7 kilogram per barrel of oil equivalent. If you look at methane, it's 0.04. You reflect that and compare it to any company in the world, you'll find out you are the lowest, if not one of the lowest.
But how does technology help you do that?
Oh, technology is important. For example, I can find out for example, if you drill a well, instead of a well, to maximize the production, instead of drilling 2 wells, you can drill 1 well and get the production. Reducing the number of wells you drill matters. The way you drill these wells matters because at the end if you reduce your water coming from the subsurface, to bring water to the surface, it requires energy. If you reduce the amount of energy by reducing the amount of water, it will be reflected in your carbon footprint. Everything is related. If you look at the plants, the compressors, for example, leaks, monitoring leaks through utilizing technology and sensors and all of it, it is important because we can deal with them for methane and all of that. All of this is related. The way we flare, if there is any flaring, and how do you manage it quickly.
You also mentioned that you've become a shareholder in Humane, which is the national AI company, new national AI company of the Kingdom of Saudi Arabia, along with the Sovereign Wealth Fund. So what's the vision here, and what do you contribute beyond shareholder?
We just signed a partnership. It's going through the regulatory process right now with Humane. We will be a significant minority shareholder in Humane. Humane will be building data center, will be doing applications, large language models. They will be doing a lot of partnership with the companies you mentioned, NVIDIA, Google, Qualcomm, all of these companies. And they will be expanding in the kingdom and out of the kingdom, and they're capitalizing on the talent that we have in the kingdom, the capabilities, energy, low-cost energy, which is very important for data center. So all of these things, it is important for us, considering how much we have invested in technology as Aramco, and the way we are looking forward, how much we need, and that partnership is important for us as we are going to grow our investment in technology.
I mean, certainly people are excited about the potential here, especially with the access to low-cost energy for Saudi Arabia to become a major AI hub, maybe behind US and China.
It is going to be, and if you listen to the CEO of Humane, he mentioned that we will be third after.
Third, that's what I said.
After the US and China, capitalizing, as I said, on the focus on the talent that exists, on the low-cost energy, and the support from the leadership, because that requires a lot of support. It will be the national champion, and it will be the global players when it comes to technology and AI. Here, if you want, in the data center, if you want renewable, you will find the lowest cost renewable. If you want gas, you will find the lowest cost gas. So energy is available, and land is also available to build all of these
Looking
centers.
out in the next few years, how much of your business do you think is going to be driven by demand for building data centers and power around AI?
Yeah, and it will be, as I said, I mentioned it's 4 times all the electric vehicles. So data center will be gas mainly, will be big in gas or renewables. Now, how much, as I said, if you look at it today, they're looking by 2030 to 2,000 terawatt hour. Today requirement is maybe 28,000, 30,000 terawatt hour. So that how much it's the growth, but it is a significant growth considering the growth that we are seeing.
So you've been at the company for 10 years, and I think I asked you this around FII, but what is your vision for the next 10 years of Saudi Aramco? What does it look like?
I have been in the company.
Well, you've
as
been
a
the
CEO.
CEO 10 years. You've been in the company for a long time. You started as an engineer.
Yeah,
right?
Of course. I'm a petroleum engineer. I think, as I said, oil and gas will continue to be there for decades and will grow year on year. And that's an area that we have the reserves. We continue to add to it. And we will grow both oil and gas. But at the same time, we are in renewable, and that will continue to grow. The kingdom is building a lot of renewable, and Aramco with Aqua Power and BIF are partnered in growing the renewable in the kingdom. At the same time, we're looking at hydrogen, provided that there is offtake, and in the future, if there is a demand, this is the lowest cost of blue hydrogen, or if you even want a green hydrogen, in terms of cost, how much it will cost you. So we will be very competitive if the market picks up on that requirement. We're looking at the future in LNG, and we are investing now out of the kingdom in LNG facilities in different parts of the world, and we will grow that business. We're growing also minerals. We're just starting. Hopefully the first processing plant will be in 2027. And we're looking forward to be also big in minerals in collaboration with Ma'aden in the kingdom. So we are looking at all of these sectors, but the focus to hold all of these together is technology. This is why the $7 billion in venture capital. This is important and critical. This is why the partnership with Humane. We're looking at AI and technology in general as an important element in our future growth.